given information under the red 2, we said assume materials was 15,600 and conversion was 12,800. Well, we've allocated that to materials and conversion. That total cost is 28,400, 15,600 materials, 12,800 in conversion. Now, we're going to look at costs that were added to the assembly department. That was also given. Costs added to assembly was 406,900 materials, and then conversion was 394,300. That total cost added was $801,200. Now, we take that total cost for materials and conversion, and then we divide it by our equivalent units. So we take the 422,500 divided by 7,300, which was our equivalent units of materials, and we get $57.88 of materials cost per equivalent unit. And then we get the conversion, we get $58.91 per cost of equivalent unit. You add those two together, and we get a total cost per equivalent unit of $116.79. Now, the third step is a cost reconciliation showing all the cost flows in and out of the department during the period. So we're going to take cost. So we're going to take total cost, which was. So the first thing we're going to do is take the total cost that was transferred out, which was the 6,000. Those were the whole units, the completed units. 6,000 times the $116.79, which was the cost of equivalent unit, is $700,748. That's our first step. Those are the whole equivalent units. Then we're going to multiply by our work in process, and so we've got 1,300 equivalent units in materials. We multiply that by the equivalent unit cost of materials, which is $57.88, and that gets us $75,240. And then conversion, remember we've got 910 times the equivalent unit of conversion, which is $58.91. That gets us $53,612. So then the total cost and work in process at the end of the year, or end of the month, is $128,852. That plus the transferred out is our $829,600, which reconciles back to our total cost in the step 2. So, third step, reconcile the cost back to step 2. So that's our production report. So now we know what would the total cost transferred out. So this is the cost that we would transfer then to, say, finished goods, is the 700, and then the cost that would stay in work in process is this ending balance, 128,852. All right, let's prepare a production report under the FIFO method. Now realize the FIFO method is not commonly used. It's a little bit more cumbersome. There's extra steps, and so most people use the weighted average when they're preparing a production report, but I'm going to walk you through an example just in case your professor is mean enough to make you study it and maybe show up on an exam. So let's walk it through. So we're going to go to this number 3, the red 3. So take the information from the equivalent unit cost calculation, which is in these sort of green boxes right here. And then we're going to say, prepare a FIFO production report for the assembly department. Assume that beginning work in process cost was equal to materials 15,600, conversion 12,800. Further, assume that the following costs were added to production during September: 406,900, and then 394,300. Okay, that's the same given information as our weighted average. So what we're going to see is what differs between the two. All right, so the first step to the production report is the same. Calculate equivalent units. So remember, the first thing is we're going to have to come up with our total units to be accounted for. It's the same. It's 1,200 plus the 7,400 started. It's the 1,200 beginning and the 7,400 that were started into production. That's 8,600. But the difference now is we're going to calculate equivalent units of beginning inventory. We're going to have the started and completed, which is 6,000, and then we're going to have the equivalent unit calculation of ending. Okay, so the beginning, as we see here, the beginning inventory was 35% complete. The conversion for beginning inventory was 25%. That was, remember, that was given up here in our green box, but we didn't use it in the weighted average report under the weighted average report, but we're using it under the FIFO. So it's the same as the ending. We just take what's 1,200 units, 35% complete. The equivalent of that in whole units is 420. What's 1,200 units that are 25% complete equal to in whole units? It's equal to 300 units. Take that plus actual whole units completed and transferred out, so that's equal to 1. It was 1 unit completed and transferred out, 6,000, times our ending inventory equivalent units, which is the same. It's the 1,300 and 910. So we add those together, and under the FIFO method, we come up with total equivalent units of for materials 7,720, and for conversion 7,210. Okay, so that's different than the equivalent units we had under the weighted average. Now let's go to step 2, and step 2 is to come up with a calculation of cost per equivalent unit. So how do we do that? It's the same way we did it under the weighted average. We take our total cost, which was 28,400. That was our beginning, our beginning cost of work in process. Plus, we're going to add the cost that was added. It's the same, the 801. 200, which was the 406, 900 of materials and the 394, 300 of conversion. So our total cost is the same as under weighted average, the 829, 600, but you're going to see our per equivalent unit calculation is different because our total number of equivalent units is different. Total number of equivalent units is for materials is 7,720, and that gets us with a equivalent unit cost for materials of $52.71, and for conversion, it's the total equivalent units is 7,210, and that gets us to a total conversion equivalent unit cost of $54.69. You add those two together and you get a total cost per equivalent unit of $107.40. Now we're going to come up with our cost reconciliation. Remember, this third step in the production report is a cost reconciliation, so we need to reconcile back to that total cost of $829,600. So how are we going to do that? We're going to allocate costs to our beginning units. We're going to take the total beginning cost of 28,400 times our equivalent unit quantity and our equivalent unit cost, and then we're going to come up with what it took to complete those units. And so we're going to say it's 66,943. Then we're going to take our total equivalent unit dollar value, which was 107.40, times the 6,000 whole units completed, transferred out. That's going to get us to 644,371. So we've accounted for the beginning cost, the transferred out cost. What's the ending cost? Well, the ending cost is similar to what we did over here. It's just the equivalent unit quantity times the equivalent unit cost for materials and conversion, and that gets us 118,285. Add that to the transferred out, the beginning, and you get 829,600. That is our cost reconciliation, and you'll see that the work in process is 118 under the FIFO. Under the weighted average, it's 129. That's where the difference comes in under the FIFO and the weighted average is the ending work in process balance. Now that we've gone through that, well, that's process costing. It's very similar to job order costing, but you do it by department and you do it by preparing production reports. Now let's move into the journal entries. We'll do this very quickly because the journal entries are pretty much the same as in Lesson 3 for activity-based costing, Lesson 2 for job order costing, and Lesson 1 for the cost of the schedule of goods manufactured. It's all the same, except there's an intermediate step where we're transferring work in process between departments. So to record the transfer of raw materials into work in process, we're going to record it into process A, process B, credit raw materials. To record wages as direct labor to work in process, we're going to debit work in process, department A, debit work in process department B, and then we're going to credit wages and salaries. To record the allocation of manufacturing overhead, we're going to allocate manufacturing overhead to department A, department B, and we're going to do that under the traditional or the activity-based costing, but we're going to do it in a department. Then D, to record the transfer of work in process from department A to department B. What you're going to do is you're going to debit work in process, Department B, credit work in process, Department A. So we're taking the work in process from this department, transferring into this department. Similar to what we did here is we're saying what was in assembly, what was transferred to finishing. Debit work in process, Department A. Debit work in process, Department B. Credit department work in process, Department A. Then to record the transfer of goods and work in process from Department B to finished goods. So they go to finished goods from Department B, debit finished goods, credit work in process Department B, and then you have a sale, same thing, debit accounts receivable, credit sales, debit cost of goods sold, credit finished goods. The T accounts are the same except you have two work in processes, Department A, Department B, and you'll see there's a transfer between there. That's very straightforward. That is something that you should know, having gone through Lesson 1, Lesson 2, and Lesson 3. But it's just an intermediate step of the other work in process department, and that's process costing systems.